Okay, good morning, traders, and welcome to this intraday strategy webinar on SB Trade Desk. Today is Thursday, April 11th. Great to be with you guys here to wrap up the week. On the back of yesterday's ECB interest rate decision, we got CPI numbers that were quite interesting yesterday as well. We're finally starting to get some volatility, but, and it's capital B with that but, I'm going to caution you against trying to pre-play a breakout, because although we've had a lot of nice movement over the last 48 hours, trades are still within the key ranges, guys. We haven't really broken out per se on a lot of these trades. So caution again about trying to follow through and look for the bigger plays here. We still want to stay rather nimble as we continue to trade these ranges until we break out. On the menu for today, as always, DXY. We'll start off with where we are on that. Nice rebound off support and overnight trade. Euro, nice rebound or reversal off resistance. Aussie from last night. We'll also talk about dollar yen and euro kiwi. Still lateral movement there just below resistance. Hasn't hit the last limit trigger, but we're pretty darn close. So we'll take a look at euro kiwi. Pete, I see you in the room. SPX, man, that slope we adjusted still holding. As crazy as it's been, it's still just complete vertical. Jamie with a nice little tweet yesterday saying there's no such thing as resistance in equities. Seems to be the truth at this point. We'll then circle back to the previous update on dollar CAD, and we'll wrap up with look at gold and crude. Okay, both at pretty nice plays this week. Eman says, hello, Michael. Good morning. Hope you and the family are all okay. Thanks, Eman. Always a pleasure. Jaya, good morning to you as well, sir. Okay, any other questions or trade setups at any time, feel free to throw them on the message board, guys, as always. Here's where we stand from last night's update. So real quick, with regards to, let me go over the euro next. With regards to the ECB, they came out a little bit more dovish than expected. They said that the risk to growth remains to the downside. It's been increasing a little bit. But it wasn't enough to interrupt the euro that much. In fact, the euro ripped lower and bounced off of a perfect slope parallel. So we'll talk about that in a moment. First things first, here's where we are on the DXY. You all know the weekly chart. I don't even know if you want to look at that real quick, but here it is, just for argument's sake. Weekly chart, just to highlight again that we've turned below 97.42. Last year's high week close has still been the major resistance level on this thing since the start of the year. Magenta is the yearly open. There's that high week close from last year. So 97.42 still on a close basis, heading into the close of the week, is still critical. And again, wouldn't call this necessarily divergence in momentum. These two reference points were, but this is kind of just flatlining, right? So the range is well set. The initial reaction that we've got early in the week is pretty decent, but we still can't rule out like an intraday spike into 97.87 or some more. Let's just say if we get a break to the top side, this is where I'd be looking for a more concrete reaction, okay? Intraday, well, here's the daily. We basically turned right ahead of the 38.2 in the DXY. And we've basically, at this point, in my humble opinion, set the monthly opening range right above Fibonacci support. So opening range highs, opening range lows that we set basically yesterday and the day before, just above 96.87, right into the 97 handle. That's basically what we're looking for. Validation for some sort of reaction here in the DXY. Nothing's really broken out yet, and we are still trading above upslope support. So while I'm all about wanting to play a dollar correction, we haven't broken support yet. We can't jump on that train. The reversal off this region was our play. This is the first level. We haven't even gotten a break below it yet. Here's the intraday chart, and this is the slope that we've been following since last week. Okay, so yesterday we highlighted that we were sitting at confluent support. You had that 38.2 retracement, 96.84. You had the lower parallel for this pitchfork we've been following off the monthly highs so far this month. And, again, just from a trading standpoint, looking for resistance right near the median line, right here on this advance. If we travel a little bit higher, okay, a 38.2 retracement comes in line with that 50 line or the 75% line up here near 97.23, still could see failure. At the end of the day, you're still resistance, guys. This thing is just in the monthly range. So I do think you get a little bit more of a rebound here. Even if it pulls back, I think it stretches higher, but we're looking for failure either at the weekly open or 97.23. Those would be the levels if this thing is going to move lower. If we break, obviously, the weekly open, guys, that's also just pips away from the high day close above 97.42, and you're looking for the stretch into essentially 97.87. There's a soft target here at 97.71, but 97.87 is going to be that big, big level that shows up on the daily chart, shows up on the intraday chart, shows up on the weekly charts. Okay, the upper slope is what I'm waiting for, 97.8. Okay, Ty, you read my mind. I don't know if you just put that out right now or if you put that out earlier, I just saw it. Yeah, I mean, that's honestly, that's for me, if there's going to be a major short in the dollar, that's where I'd want to put all my chips. Um, if we had broken below this in overnight trade, I think we would have gotten the onset of the decline. This is a little concerning. So 97.23 on initial thrust, if you're holding longs, push through 97.42, 97.37. This key zone right here is what would put the long side back into focus. Ty, near term, this could go either way, man. I'm just picking every dollar across every major and trading it on its own merits at this point. I'm not really trying to base, kind of like an objective broader dollar move, because based on this, the euro downside or the euro upside could really be limited, if not at jeopardy at this point. I'm laying down a big trade there wherever the euro is at that time. I mean, Ty, again, I don't want to get too excited about it, but 97.87 is a sweet level. Yeah. I was really hoping we would get there last year. Do you see this? Remember this back in the December advance? It converged on parallel. We had a target there, and it was like, man, if we just got into that region, what a short it would have been. Never did. Obviously, we collapsed into the start of the year. Again last month, right? Just pips away. Last year's high held. So, yeah, if we break this high, maybe we finally get that tag. Okay, but as long as we're in this near-term trend, again, don't pre-play any of these breakouts, guys, unless the levels give out. Because this thing, nothing's been lasting. No matter what you get, whether it's non-farm payrolls, whether it's minutes, whether it's ECB, nothing lasts. All the moves have been faded and continue to consolidate. So just keep that in mind. All right, any questions on the DXY? Okay, there's not really anything as far as data is concerned, guys, until the end of the week. You have University of Michigan confidence numbers tomorrow, but shouldn't be a major market mover. Okay, so with that and that objective look at the DXY euro. So euro looks like this. Again, a trade that was at resistance, and I was so impressed by that picture perfect reversal right off the lower parallel. Guys, you can't make this stuff up. As soon as the ECB came out, slammed lower. I tweeted the chart as soon as I could when I noticed that the hourly bar was essentially retracing half of the entire move just minutes after the release. That's the exhaustion trade that you love to move to play rather. So along against that stab low was definitely a trade. If you took that limit initially was 28.47, 28.50. Half off, if not 3/4 off there. Stops at break even at this point. But look, it's still in the range, right? Here's your initial weekly opening range. And like I said, there's nothing here to pre-play the breakout. Okay, the initial opening range played, the pullback failed right at slope support where you'd want to see, but the subsequent rally didn't make a new high. Or actually it did, but essentially, again, we're still holding that same resistance. Here's euro now. Okay, first, I'll bring your attention again to the weekly chart for a quick breakdown. It's the last day of the week, so before you leave, again, heading into the close of the week, this is the trade that we're looking at, the levels that we're looking at. 1186, 618 retracement has been the lows for the last couple of drops here. Your major resistance isn't up until 13. I have 1313 on the daily chart, 1330 here on the weekly chart is going to be your 200 week moving average slope resistance, a series of slopes all converging right there. This is the entire universe for euro. 111.80 into 113.30. We're still looking for that break. Okay, momentum. Well, that's some beautiful divergence. Lower lows, lower lows, lower lows, lower lows, higher lows. Still holding that support trigger. Okay, weekly chart from 1,000 feet up. Ready? Daily chart looks like this. On this initial advance, why things started to look a little precarious yesterday was because of where we ran into. You'll recall 112.84 was the 38.2 of the near-term drop, but you also had that 113 structure, which is a way back pivot from back here. We've been talking about this for years, and that gave us a nice little range of resistance of 15 pips below 113. That's exactly where the opening range highs for the month have now registered. So, as long as this whole high holds for another day or so, this would be a decent monthly opening range to try to set up. Topside break, clear cut move, 1350s, 1347 is going to be at 618, 200-day moving 100-day moving average, excuse me, and the like. Right now, though, momentum just checked 50, and price just checked resistance. Okay, here's the intraday chart. So, no change, okay, from the levels that we played earlier in the week. The pullback found perfect support. Look at that. You can't even make that. 1230 was the exact level that we just eyed out. The low actually registered at 1229.5, so 1230 right on the dot. So here's the rally. Again, the limit triggered at 1285, and here we are on the way down again. So stops at break even. Looks like it's going to get hit already. So whatever. At the end of the day, 1250, lower parallel. If these would be the first areas to look for sort of exhaustion, if we break through it, I'm going to take the sidelines. As I said yesterday in the update, we're going to use 1230 right now as our near-term bullish inval. If that breaks, look for weekly open support. Weekly open support comes in right around 1215, I want to say. 1214, okay? And then, obviously onwards down to the 618 if we do break. But it's make or break here, guys. It's make or break. For the next 24 hours, it's about 1230, 1285. Look for a break of this near-term range. I mean, ideally, we hold and it breaks higher. But at the end of the day, if we break to the downside, maybe we get that resumption to 1186, 9870, right? Or 9787 on the DXY. Precarious positioning. Precarious positioning. The play was the rebound off support yesterday. We'll see if this decline holds or if we see some follow through here. But for all intents and purposes, it's a very clean cut weekly opening range. And it's Thursday. Look for the break. Questions, comments, concerns on Euro? He says that was a pitiful rally off the low. You're talking about this rally here? So, I wouldn't call that pitiful, no, Ty. I mean, look, it depends on what your trading, objectives are. On a trade like this, a rally off of confluent support right into the weekly range highs, right into resistance, that's like textbook for me. So, again, trying to position for a larger 300 pip move, it's just not, it hasn't paid. It hasn't paid in some time, right? Maybe the euro short off of the early open, which we did play for a while, but it hasn't been the breakout scenario yet. So hopefully we see some exhaustion ahead of slope support. I would love to see a topside break and at least a test of 113. Combo, please, coming right up, sir. Here is the side-by-side combo on euro and euro dollar. Excuse me, the daily chart and the intraday chart. Okay, that is number 2. Number 3, Aussie dollar. Okay, well, Aussie with a final breakout, and it's taken it all back already. This thing, man, where do I start? Should I just start ranting, or should I tell you guys what's going on? So the breakout was targeting confluence resistance. I still think that's the level that we have to be focused on for the validation of a larger breakout. It's 71.84. Like I said, ultimately the 200-day moving average just higher. this is what would be the onset of a larger move to the upside, because you have that right there, and then just to the left you have that swing high that we made just above 72 back in February. So on this pullback, just like in Euro, we need to find some support if this consolidation break is legit. You guys remember this? Wedge pattern, we were talking about it for a while, saw a little false break scenario there on Friday, pulled back. Here's the breakout of that level, 71.32. And then when we pulled back, although we broke back below those lows, basic slope support, 2-point touch, gave us a third point. And here's the vault. Didn't make it into that 618. And that's the concern on the pullback right now. We want to find some support on this. You're now checking, as is, the 100-day moving average at 71.42. We're sitting on it right now in price. Here's the daily chart. And here's the daily chart on the left. So that's the level on the pullback. You know what I mean? This is where we want to find support. So even if it dribbles down a little bit lower, if this is an objective monthly opening range break, and it is the 11th, so I'm more inclined to call this an opening range break, guys, just because the sheer amount of times that we've tested a break above 71.30 since the start of the month. You got 1, 2, 3, 4, 5, 6, even this last day here on the 9th, 7th day of testing a break above 71.30 and failure on a closed basis. Yesterday, we made an outside reversal higher and failed ahead of resistance. So this is where, you know, you start to get conflicting signals. The close above the opening range highs yesterday for me is bullish. But the fact that it was an outside reversal to the upside into resistance and failed just ahead yells exhaustion, right? So I'm not surprised to see this pullback, but what I want to see on this pullback is support ahead of this slope. If we're going to move higher, break above resistance, check as support, move on, right? So I'm not ruling out, you know, a continuation higher just yet in Aussie, but man, resistance, you know, the turn here ahead of 60 in momentum, that's not bullish. And the outside reversal day into the highs, that's not bullish. So there are some things here that are suggesting just hold your horses. You might see a little bit deeper of a pullback in Aussie. Ultimately, if this is a breakout, losses really should be governed by this same region at 71.30. And again, that's just not my opinion. That's also objective opening range highs. So if this is, like I said, if it's a legitimate monthly opening range break, 71.32, then on the breakout, that's where we should find support. Okay? Just sprinkles on top is the fact that 71.21 is the monthly open. So even if it breaks below 71.30 on intraday and it spikes into monthly open support, all right, no one's going to complain. But just a lot that possibility. We have to be looking for support on one of these two levels. If it gets any deeper, this whole thing is just going to be a false break, in my opinion, and might be the completion of like just a simple correction higher. And in that scenario, we could see a whole lot more downside. Not my favored move, but certainly at the near term, that's certainly the risk and possibility here for for Aussie rather. Okay, again, the intraday looks like this. So let me just bring the April open here. That's going to be our near-term bullish inval. 71.30 is where I'd love to see some support. You've seen so many pivots there already just over the last 2 weeks. Again, slope support comes in at the monthly open. Any questions on Aussie? I don't know if you can hear that, guys, but they're doing construction here in the Daily FX offices, which I usually do these webinars from my office on SB. So sorry about the banging noises. Okay, moving right along. Dollar yen, number 4. He says I can hear it clearly. Yeah, sorry about that, man. Man, it's only in New York, right? So here is dollar yen. You all know how I feel about this trade. I'm just going to put it out there. I haven't touched it, but the levels have actually been rather clear. And on this advance, I think we get an opportunity to get back on the short side if it gets into 11.45. So remember, on the turn from this major area of resistance we talked about, the only thing that kind of turned me on to this trade was the fact that you had a 3-point support trigger that was acting as resistance for 2 consecutive days, right? And then we turned lower. So, the move and close below the 200-day moving average, things looked pretty decent for a move back, at least to the 100-day to monthly open support. And that's what 111 is. So much is there. Okay. You have the 38.2 retracement, of the advance off of the lows from March. So it's this same retracement. I don't have it on the daily chart. The 38.2 is right there. Then you have the 50 of the entire drop from the yearly high. So if you take this retracement, the 50s right there as well. Add to that the 100-day moving average and the monthly open. All lines up at 111. Okay, all lines up at 111. So from our standpoint on the intraday charts, what we were highlighting earlier in the week was that's kind of the drop into major support. This is the break we need to validate a larger move in dollar yen. Sub 111, 110.92 to be exact, would definitely open up a larger move towards 110.50. More importantly, 110.15 median line, and somewhere in that zone would be the more important support structure to look for. Well, we didn't get it. We dipped, slipped just below. Here's trendline support, even dipped right below that. I mean, I guess if you use the actual wicks, yeah. And then here's the recovery. So basic retracement still keeps the same slope and focus, okay? And and let me take a step back. The reason why, even though it broke below 1092, it was still actually a really clean trade is because look where it bottomed, guys. Pay attention to these things because in intraday, outside of guidance from here, Jamie, you guys can see this stuff and take advantage of it yourself. Outside reversal candle off of slope support on a recovery back from 30. Right after this candle closed, this was screaming exhaustion. So stop against that low. To the upside would have been a beautiful play. 1133 is the first level. Next target, 1145. For me, I'm not in the long. I actually want to look for failure here. Okay, if we break higher, this might be a decent opportunity if momentum holds 60 here on this move to play the move again lower. At the end of the day, if it breaks above the objective, well, this isn't the weekly opening range highs, but you have the weekly open here, 1160. I'm just using this as sort of the breakout. If it breaks 1160, you're just looking higher. But I love where it turned. I love where it bounced. I want to see cessation ahead of 1145 if dollar yen is moving lower. Here's dollar yen on the weekly chart, and this is why I always tell you guys when the weekly charts are kind of iffy, for me, it's usually a hands-off trade. Here's what it looks like. You're like, what the hell is this? It's either a short off 112.45, 112.60, or a break below basic slope support, the yearly open at 109 to get us back towards the 107.80, 108.40 level. So it's a low conviction trade. Let's just say it like that. The only thing I like, literally the only thing I like on this, guys, is just this spot. The drop into this was a nice support. The rebound was even a nice play, but let's see what happens here if we get a little bit higher in US trade. On Tuesday, you covered the dollar yen, and I made some great pips. Thank you, says Kelly. Hey, cheers, Kelly. I mean, yeah, listen, it's not my cup of tea. So when I go out there with a conviction on dollar yen, yeah, take it because it doesn't happen very often. Iman says, no problem as long as I'm on track with you. All right, man. Cheers. Marco says, is it okay to use a fork that has not been tested on the median line? Marco, do you have another one that I'm not looking at? Or are you talking about this one because we never actually tested the median line? Right. Yeah, absolutely. So listen, all I look for is a test of the slope. The median line, a test of the median line is like your ideal play, Marco. When you get the median line really giving you a reversal or bounce, that gives you like the utmost confidence, right? But on a bigger set, when the structure is this large, waiting for a median line tag before you operate at all, you could be foregoing a big part of the trade. So what you want to focus on is the slope, right? So the 50 line, I alternate this, guys. Sometimes I call it the 75% line. Sometimes I call it the 50. I mean, whatever you want to call it. This parallel was a perfect touch of support. So on this rebound, if we break the upper parallel, I'd be willing to use that as a resumption signal. Okay. And with the same respect, if we're failing, this is where I want to see failure for the move lower. Some of these structures, Marco, could hold for months just within the first topside quadrant before it gives out. I don't want to wait necessarily for a median line tag, but I always do tell you we need to see some sort of reaction on that gradient or that slope. Makes sense? He says, right, clear. All right, cool. Good question. Good question. So that's dollar yen. I'm hoping to see some sort of failure into 1145. If that gives out, you're looking higher again. I got nothing to do on the long side here. I have no business on the long side of dollar yen from my standpoint. Euro Kiwi, another one where the levels were clear and they played out great, but momentum has just flatlined. Here's Euro Kiwi from earlier in the week. So the last target, remember again, this posted a beautiful outside day reversal a few weeks ago off support, shifted our attention to the upside on the pullback, perfect tag of the 25% line, and launch continued higher. We were looking for an extension to 67.46, 67.40. And that was where the start of the week really put the focus. Since then, we've broken channel support and we've come right back up to check channel support as resistance, but we still haven't tagged 67.46. Here's Euro Kiwi. Check this out. Man, maybe we finally get the tag today, okay? Here it is. You see this? I still think you get it. And I said this at the beginning of the week when we opened on the previous update, on the 7th here. We were just opening the week and we said, look, the upper parallel converges on that beautiful confluence. My favorite fib confluence it doesn't have to be a 618, but 100 off the low, 50 off the high, good enough. Both of those converge on slope. Both converge on slope, good enough, right? We turned just ahead of it. So again, a day later, we talked about, all right, well, it's failure. If we break this channel, look for a break of the weekly opening range low. That's subjective stuff. If we break that, we have to look for a drop back towards 65.46. We broke the channel, the weekly opening range low held, and here we are right back again. So we take a step back and we say, it's Thursday. You now have a beautiful test of a well-defined weekly opening range. Here's your weekly open. You set a high in the first couple of days. You test the lows. We're about to test the highs again. Puts more emphasis on this region. If we clear 67.46, I think it's a beautiful play up to 68.50 and beyond. All right, but this is the level. It's make or break here. I'm not gonna, get all cute around it. If we don't, get an official push here, if we do spike and push back below, that could be a beautiful failure. In fact, it might be a decent short play. But we have to assess what price action does into the U.S. Open on a push through 67.46. This is the level. Okay, this is the level. Any questions on Euro Key? It's the only cross of the exotics, or like at least the non-dollar based majors that we've really been following like a hawk for the last couple of weeks, and the levels have been clear. Let's see if we can't clear this weekly opening range and get the definitive move. One more quick thing before we start to look, and as I always tell you guys, if the daily and weekly charts aren't accompanying, it's always one click away. Just to remind you where we are at on the daily chart and the weekly chart. Here's the daily chart. Remember that level? That's this level right here. Look what it looks like now. Whoops. Okay. Doesn't get much closer than that. And this is why this level, for me, is the breakout zone. Because so many things will be invalidated with a move above 67.46. Ready? Aside from the 50% retracement, it's last month's opening range high and slope resistance. And this gradient Caught perfect resistance, this parallel, resistance, 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 breakout, acceleration, same slope, not so clean as support, but pretty clean enough. It's all about 67.46 on Euro key. And here's the weekly chart, just to sprinkle some a cherry on top. Coming off big support. This is what turned our attention to begin with a few weeks ago. All right, so that's Euro key. Coming into resistance, look for reaction here. If we get a kickback, fine. Maybe a pullback towards 67.46 or 65.46 rather. Ultimately, we do want to see the break higher, targeting 68.50. Number 5, Euro key. All right, let's hit SPX real quick. Pete, you here? Yeah, there you go. Number 6, check it out. This thing. Geez, I'm just gonna put this in front of you and kind of like do with this as you will. It's crazy. It's crazy. So here's the SPX 120 minute, and here's what we look like. Oh, crude. We need to cover crude too, but here's what we look like earlier in the week. Oh, this was right. Boom. We were right here. You see that? So here's the thing. This slope at this point, we kind of need to be, well, let me just take one step back. This is a good example that harkens back to the question that Marco asked earlier in this session about, do we have to, the test of the median line, as it were, right? This is a perfect example of a trade that the median line offered support, but the whole structure didn't last very long. Guess what? That still tells you something. That still tells you something. So we highlighted this downslope. We said, look, I don't know if this is in play, but guess what? The median line converges right on slope support. So expect a rebound here. If we get the rebound, though, and it pops through here, the upper parallel, that should mark resumption. So technically, this break, we came back, even tested that slope as support. Look on a closed basis. Breach, support, support. Pay attention to these things. Puts the immediate focus on a break of 28.90 into 28.95. Literally. We're looking for a break of this immediate zone. A topside breach, you're looking for that 25% line. You're looking for the median line, downside break, and those targets that we highlighted earlier in the week were right back in focus. So again, I think we get some sort of near-term breakout in SPX basically today, just based on this really subtle near-term price action. And again, you would have never known. Even if I drop this completely, what is it? Well, it's a pretty darn clean pitchfork support. We're butting up against resistance, 28.95. Look for a break of this really tight consolidation. Questions on SPX? Doesn't pay to try to short this thing. Don't get cute on it. The same respect, if we clear 28.95 today on a more concerted push, man, there's really nothing to put a halt on this until, up here. Again, that's like 29.20s. 29.29 is the actual record all-time, or the record high day close from 2018. But yeah, up and away it seems. Any questions here on SPX? Notice that we are getting some divergence into this most recent high, price action making a higher high, the oscillator making a equal or slightly lower high on that last pitch. So momentum is kind of waning here. Here's what I want to say. If we break 28.95 to the upside, Pete, you want to see acceleration. Bottom line. End of conversation. Yep. If it breaks this level into the US Open, it's a consolidation into resistance. This thing should pop. If we test 29 and this thing rockets, into that region, then pulls back and makes an hourly close back below this, that screams exhaustion. Again, just my humble opinion. That's a trade I'd be interested in for sure. But it's always an if-then scenario. Trading is always an if-then proposition. All right, so that is SPX number 6 on the session. More than welcome, sir. Next up is Dollar CAD. Dollar CAD, yes, it is number 7. Here is Dollar CAD. So into first, I guess I should early in the week, we got that correction break lower. Weekly chart, you guys know what the weekly chart looks like on Dollar CAD. Daily chart, not the sexiest looking thing, but just highlighting once again 34, 37, 34, 35 is a major critical resistance zone and slope. And here we were checking support, right? If we were going to get the break, that's the break we needed to see to validate the move on a more critical region down at 3250. This is huge. Okay, 3250 is the longer term yearly slope support. It's the 100% extension. It's the 618 retracement, my favorite confluence zones. At this point, here's what the trade looks like. Opening the week, or on the first day of the week on Monday night, we noticed, look, this is a big support zone. If we break this, it's also the objective monthly opening range lows. It'd be a nice play. Here's a false break scenario. We caught that slope just lower. Boom. And here's the break. If we move through 33.91, that's another test of 34.37, guys. I wanted to see this halt right here, like right at the upper parallel. That would have been a beautiful setup, but it didn't. It ripped right through. We're now checking the weekly opening range highs, objective, the 618 retracement, objective. Oops, I'm mistaken. That's got to get even lower now. Even more so. It's got to hold right here. So it's now or never. Actually, this might be a decent position if it starts to pull back for a stop against there. Don't fight it just yet, but I'll be looking at this in the US trade session. So this is a full roundhouse, right? We just came right back into weekly open resistance, Fibonacci resistance. This is a big level. If this is 100, it would also make my day. I don't think it is. Ooh, just above. Just above. This holds pretty big, 33.80 to 33.90. I need to close above that. And if we close above that and momentum is at these levels or higher, you have to just allot the assumption that this thing's going to rip right back into that 618 again. $33.60. Look for support there if the breakout's legit. We don't need that 100. You know what? We could probably scratch this at this point too. Any questions on dollar CAD before we move on? So again, despite the moves, despite the perfect or nice responses, I should say on this one, not perfect, but nice responses off confluence support, at the end of the day, guys, all these trades are still in their weekly opening range. It's so frustrating, but that's where we shine, near term, right? Nothing to sit in here for too long. Be nimble. Make sure you're always booking profits at these levels. And at some point, these consolidations will break. I promise you that. Yes, sir. Here's the combo. All right. Next, commodities. Let's take a look at the gold and crude trade. A quick update. Actually, I didn't look at sterling this morning. Give me a sec. Let me just, this thing's still doing nothing, man. Guys, this sterling chart is pretty much all you need is the daily. Just a quick review. Um, all we've been trying to assess is what's going on along this. This is the 618 line of the pitchfork we've been following from the yearly lows. It's been ridiculous since the start of the month. Look at this thing. And the monthly open is there now as well. Okay. Now, I mean, even on the weekly chart, look at this. So, like, man, ultimately still constructive above 2750. Near term, we got to clear 133 to mark resumption. Then you're looking for that 35 30 region or just below that 35 handle. Essentially starts to become the 2017 high week close. Nice pivot in price. You got slope up there, the works. But right now, we're just trying to assess how this thing's going to react here. So keep an eye on sterling. Again, it's a high risk trade at this point. You still got these headlines coming out of nowhere, but price is still at least respecting slope pretty well. So we'll make that a tentative number 8, a really soft sterling update. Gold coming right up, man. Here's what gold's doing. So here's the weekly chart. Not really much to talk about here. Our suspicion on gold, you guys know how I've been suspicious about this whole rally, was well warranted. Failure utterly at 1307 on building divergence. Man, this thing's turned pretty radical. So look, 1291 is what I noted as bullish inval. The break below 13 opens up this decline. I wouldn't be trying to get involved here until we get a little bit deeper from here. But yeah, that was a pretty essentially rejection ahead of resistance. Remember, 1313 was the broader bearish inval. You had the March open, you had the 50% retracement, you have slope resistance from the yearly highs. Is this a raised ceiling, which is a sign of exhaustion, price turning ahead of a slope resistance level? Even here, the upslope we've been following, resistance, looked like this yesterday was a perfect exhaustion trade. Was looking for a move and a pull back into the parallel to offer an entry for resumption. This break suggests probably got a little bit more downside to go here. Here's gold from earlier in the week. Right, there's that 1307 level, 1302 level. That was our near-term bearish inval. Once we broke that, the upside risk was for a move towards 1307, and you got that move. This broke, you stabbed right into 1307, and this failed. We're back below 1302. Again, look for that drop towards 1291, 1292 is still going to be the level you're looking for as support. I'm short at 1307. Man, E-Man, you are killing it with this trade. Well done. Well done. So bullish invalidation used to be 1275 and 1260-ish, says Ty. Right. Ty, we move up. Absolutely. Yeah, Ty, the bullish and bearish invalidation levels, I update you on those. I try to update on those daily because as the market is moving, absolutely. You don't want to leave a bullish inval down at 1260s now that we're trading at 1307, right? I'm not going to take a 40 pip loss. Near term, is this, I think you're referring to the quarterly charts that we published on Daily FX. Yeah, let me take a step back, Ty. I think I know where you're coming from. Yes, on the broader charts, 1250, 1258 is bullish inval. That's the weekly, right? That's a forecast we just published. Yeah, even if, over the next couple of months, this were to drop into this region, it's still constructive in my eyes. But from a near-term standpoint, no, 1302 was was the level that we were looking at. 1291 would shift our focus back towards the lows. So then you'd look for 1280. Remember, 1280 was the yearly open we just missed here. So that's the risk. Ideal scenario, guys, E-Man, just again, my humble opinion, this thing drops towards weekly open support, maybe the lower parallel, and starts to resume higher again. If we get below here, then my suspicion was correct that we need to look for a new low before this thing's going to correct higher. Also, objectivity, right? So what would be the next level on the downside if this formation breaks? That basic slope off the yearly lows. This. Okay. First things first, though. I want to see support hold at the weekly open if this is going to work. I was always trading gold behind your weekly articles before SB. Cheers, Michael says Eman. I appreciate that, Eman. Yeah, I mean you're now in the cream of the crop here, so you definitely get the updates way more often. Yeah, that weekly forecast on gold, they're like alternating through the guys, so I'm not writing it every week anymore. But um, I did get a couple emails of people asking why that hasn't been updated. But yeah, Eman, you got to hear whenever you need any levels, just let me know. It's been pretty. You've been playing it exquisitely. Let me say that. Watch the downside here towards slope support, towards the weekly open. We'll see if we can't find some support down there. Do we have time for Kiwi? Marco Kelly's asking the same exact thing on Kiwi. Let's take a look, and then we'll jump into crude. Okay, so that'll be number 9. 10 will be Kiwi, New Zealand, and then 11 will be crude. Okay, so here's New Zealand dollar. I have haven't really had a focus on this since the rebound off of 67.20. We talked about that. 67.20 was the 618, the entire yearly range. You saw the 200-day moving average in that region. We were talking about the downside being at risk into this region here. Now, I'm not sure why all my slopes are jacked up here. But here's the last Kiwi update on the intraday trades. Okay, so into the start of the week, and I think we went over this on the webinar on Tuesday, right? Marco and who else was asking about this? And Kelly, we were talking about this to the start of the week. The bounce wasn't so much surprising. We wanted to see that Friday high hold, channel resistance hold to mark resumption. So like this thing basically broke channel resistance, but still held Friday's high. So I think we missed the play here. The opportunity would have been that exhaustion trade and a short against that high, with the target right now, again, being the same target that we had on the downside, the initial play, those 67.20. Now, as far as, again, let me take another step back. So the whole thing with this is why I've been very hesitant to take shorts on this into this region is because of where we are here, guys. At the end of the day, if this is a break of the multi-year trend or the multi-month consolidation, whatever way you're approaching Kiwi, if that break is legit, we want to start to see some acceleration here. And 67.20 is not just the 618, it's also the monthly opening range lows now. It's also the range lows for February. And it's followed very closely by yearly open. So this whole 30 pip range, guys, just watch out. I like it lower. You're not really working with a favorable risk to reward here as far as trying to get involved in a short, because we're basically trying to break a major key lateral support level at 67.20 to 67. So that's all I want to say on this thing. Marco says, I'm short from 67.65. So he had a great entry, Friday's high. That's the level we want to see hold. Good foresight on this one. Marco, all I can tell you is that 67.20 is the opening range lows for the week, and it's the 618, and it's the February low. If this is a scalp, if this is an intraday position, I hate that word scalp, but if it's an intraday position or under short-term trade, take a little off in your 67.20, stops to break even or better, if not to the last swing high, and leave a little on for 67. 67.04 is really the big Bahama Mama. Okay, why? Because although, well, first of all, it's subjective yearly open support. So that's where we open the year. But after the initial pivot break in January, every pullback, even the spikes, have failed right ahead of 67, right ahead of 67. Then after the high was registered, then the 618 starts coming into play. Right? So it just tells me, hey, if we slip below 67.20, not out of the woods yet. look for that 67 break. That, in my mind, would absolutely validate the reversal or the break of the consolidation zone. And man, if that's the case, finally, Kiwi gets the downside break and opens up, a larger decline. First initial target would be 66.30, just a basic 618. But yeah, despite the big move we just saw, we're still testing range lows. Got to get that move. Got to get that move. Marco says no. You want to elaborate on that, Marco? It's not a scout. Okay. If it's not right, so listen. I think you have a great entry as far as the intraday chart is concerned. You put a break even stop and let the limits play out. If it gets through 67.20, man, it's a breakdown, and where we reversed again, just phenomenal. Just phenomenally. The 200-week moving average, 50% retracement, yearly opening range highs, the works. So it's all the emphasis here on 67.20 into 67. Okay, that is Kiwi. Number 10. Last but not least is crude. So I'm catching some heat from people in the city here on various trade desks who saw that update that I published on Daily Effects a couple of weeks ago, or I think it was last week. I can't remember. It might have been earlier this week. Calling resistance. Look, guys, when I'm showing a weekly chart, I don't give a damn what it does intraday. Okay? If this weekly close manifests above 64.40, all right, cool. We're still bullish up to 68. If it doesn't, I don't care that it spiked through. The reason I publish the weekly chart is because that's what I'm watching. And if the weekly chart closes below that key resistance level, we get a line chart looking like this in a pullback. That's simple resistance. And again, I'm not saying I'm bearish crude looking for 50. I'm just saying that the uptrend is at resistance. This is sort of the last major target. Actually, this was the last major target that we highlighted on the yearly trade opportunities. But this is the extraneous secondary zone, and you want to curb your expectations up here. That's all I'm saying. Okay? We got the breakout in momentum. We got the breakout in price. This is your first level of resistance. If you're going to get a kickback, this is where it would be. You're still constructive above 60. Topside break, you're looking for 68.72. Okay, so I recognize that this thing intra-week spiked as high as 64.77. I recognize that. My level was 64.40, the low that we made back here in August. Whatever, right? Markets don't work in a vacuum. So I'm waiting for the weekly close. My suspicion is that we do close the week below this region. You get a little bit of a kickback. Ultimately, it's a buy. But as it stands right now, you're at resistance. Okay, the intraday charts haven't really left much excitement to be desired as far as trying to take an intra-week position. The only thing I'm looking for is exhaustion. Everything that we talked about, guys, broke. But, like we always say, a breach of upslope resistance should see acceleration. A lot of times that's the steepest part of the move. A downside break of a descending channel oftentimes will be the sharpest part of the drop, right? So here's the breach. First of the pitchfork, and then we had an interior channel here, just another formation that we wanted to offer guidance. It was a little bit cleaner on the way up. Break, fizzled and failed right away. The pullback, now testing that pitchfork resistance as support. Again, that pivot zone at 63.68, the level that we were initially looking at. The bottom side of the 63.68, 64.40 zone is being tested now. If we get back below this, sure, yeah, I think you get the bigger pullback. Ultimately, like I said, it's a buy. But near term, I'm not trying to get in any long positioning here on crude. It's funny, one of the fundy guys from a trade desk in the cities, I was having a discussion with him yesterday, and we were just telling him, he was like, well, OPEC plus and Russia and China, and that's been in play for a few years, guys. Okay, so now, all right, they're teaming up. Okay, cool. They're putting a floor under crude. Okay, cool. I get it. But guess what? The technicals broke bullish way early in the year. Nothing new with this necessarily plus OPEC plus thing has made a fundamental shift in price. And we're at resistance. I don't care that OPEC is doing this or that. We could get the pullback here, period. So filter out the noise, guys. I guess I have the benefit of being, exposed to a lot of different opinions, having worked here so long in the city, knowing all these guys. But for me, I like to fade them. I share this information to you because the prevailing opinion, especially when it becomes consensus, is typically not what you want to jump on board. I'm not saying you want to fade it automatically, but it's typically trades I want to be even more careful of. Does that make sense, guys? So watch resistance here. Watch resistance here. I wouldn't be surprised if this thing pulls back below 64.40, 63.68 and closes the week below. Everyone's going to be, oh my goodness, and start throwing their hands up in the air. What the hell is happening? It's just the pullback. It's just the pullback. And just as people start to say, oh my God, oil prices are collapsing, that's when you start to look for support. We get right back in again. It's just too much. It's just too much. The extremity of this sentiment is getting too much, in my opinion. Okay. Marco says great sense. Cheers, Marco. Try to share all the information I got with y'all. Euro yen. I should have known you were going to ask about that, Ty. Let's take a quick look. He says it looks bad. Skip it, please. Anything on euro yen? Listen, I'm always down for a challenge, man. You can never throw a curveball at me. I'm always ready. Let's go. Here's euro yen. Let's see what it looks like. Let me daily chart first. So I would still maintain that 1290, 125.90, 126. I would still maintain that that's major key resistance here, based on slope, based on the 100-day moving average, based on the median line. Even though this formation's been a mess and a half, I'd still be working with this slope, man. It's been pretty decent. So let's see if there's anything else to put some color on this. So by the way, this line that you see has been broken through a million times. This is just the low day close from last year. Uh, I literally just leave it on there for reference, but you can see it's basically been resistance this month. It's also the 50% retracement of the range and the 618. Okay, this chart's kind of messy. Let's see. Let me take a look at the intraday chart, Ty. See if we've got anything here. So there's that channel that we were following last week. It's a messy break. Let me get rid of these now. Didn't quite complete 100 off the low yet. And that's the 618. So, on the daily chart, we don't have this, I don't have this slope represented on the daily chart just because, again, we're working with the dominant slope here. But you can see that 618, 126, actually does converge on the near-term chart right on the upper parallel. So this is just a modified pitchfork from the highs of March. Median line. First of all, lower parallel, perfect support, right along lower parallel. Bisector median lines haven't really been that clear, but here's the median line break, recovery, pullback. Looks like we bounced just off that, right? So clear weekly opening range is set. If you see the top side break, I wouldn't stress this 100 at this point. Scratch that because the wave count here is not so clear. I'd be looking for that 618. And this is the 50s, basically resistance right now. So Ty, to put things bluntly, or to put things easily, how I view this right now. You broke above the median line. You set a weekly opening range right here. Okay, you're unchanged. This is where you open the week. You're essentially like a couple of pips higher. You're sitting slap in the middle of the weekly range. That's not your ideal positioning to get into anything new. Okay, so if we breach the highs, 26 is your level. If we make another rally at the highs, you see failure here, stop against the weekly opening range high. You're looking for a drop towards the median line. It just so happens that last week open converges there. I wouldn't use this as a major target, but it is an uncovered. Basically, this is where we gapped into. right, into the open. So that would be sort of your level on the downside break, but it's certainly a pretty clear opening range setup, if anything. Okay, let's do that. Drop last week's open. There you go. All right, ties. A quick look at what I'd be looking at from here on Euro Yen. And again, I in the corner of my eye, I tend to check this just daily because I know you're not the only one. There's a couple guys here on SB that always ask about it, but just hasn't. It's been chop city. It's been chop city over the last 4 days. So just be careful. If anything, put a gun to my head. I'd say it probably makes a move down towards 2460, then rips. But we'll have to see. Kelly says, love our mornings together. Hey, cheers, Kelly. All right, guys. So if there are no questions, I'll go ahead and wrap it up here. As always, thanks for everyone who attended. And again, have a great weekend, guys. I'll see you bright and early on Monday morning for the free session on Daily FX. I think next week I'll have to move the webinar to Wednesday and Thursday. I'll keep you updated, guys. Remember, I usually update the homepage with the webinar schedule either on Thursday or Friday. So keep an eye out there for next week's schedule. Just might be an alteration just to the Tuesday webinar. Other than that, we're right on point. All right, guys, have a great weekend, and I will see you Monday. Cheers.